Alright, what's going on YouTube? My name is Tyler Self, and in today's video, I'm going to be going over my exact M1 Finance portfolio for dividend reinvestment, and I'm going to be telling you guys exactly what kind of holdings that I have in this portfolio, as well as my investment philosophy. Before we get started, if you haven't seen my investment plan for 2022, I'll leave the link right at the top right for you to click on, kind of give you a more broad understanding of my investment philosophy. As you can see, I'm a relatively new investor in terms of just the capital that I have to invest. What I've currently been doing is doing about $125 per week into this portfolio. And as you can see, I actually started investing in this portfolio back in November of 2021. But real quick, before we dive into this portfolio, let's talk really briefly about what dividend investment is and why I actually choose to invest in this manner. Generally speaking, with stocks, you have what are known as capital gains, which is your market gain. You can see here, that is simply how the stock goes up or goes down. That's the metric that determines how the stock goes, whether it's up or down. That is your market gain. As you can see, my portfolio currently not doing so hot. We are currently in the midst of a market correction. That's what's going on right now, which basically means that a lot of the companies are selling out of their shares and a lot of investors are actually becoming bearish in the market right now. Bearish simply just meaning fearful of the market. They're seeing the stock market go down and they are taking action by selling their assets. You can see that the net cash flow that I have in my portfolio is this much, basically meaning that that's how much actual cash that I put into the portfolio. So you can see I'm actually currently down 3% in my overall portfolio. So market gain is the first major metric, but when it comes to dividend portfolios, you're actually earning another type of income through your portfolio, and that's actually earned dividends. So you can see overall in my entirety of owning this portfolio, I have made over $10. I've made $11.78 in earned dividends. I know that does not sound like a lot, but I'm going to be going over really quickly kind of just overall the whole purpose behind this. All right, so real quickly, I have this website pulled up called marketbeat.com. This is a dividend portfolio calculator. I have some pretty basic and conservative metrics included here. You can see in this example, we are starting out with a starting principal. So the initial amount that you invest, we're going to say is $500. We have an annual contribution of $100 per month, which turns out to be about $1,200 per year in annual contribution. All of this, we'll say 20 years invested. You can see down here, the ending balance that we would have is actually $52,585.88. Now that is a total return, which is pretty good, following a very conservative market return of about 3% per year. The market statistically has been doing around 10% per year. You can also see the annual dividend income. Now this is assuming that we did the DRIP functionality, which is dividend reinvested in the portfolio. Out of this $2,629, we have reinvested that into our portfolio. And of course, the total dividend payments over the 20-year period would have been this much. So you can see $19,000. That is really, really great. So that's just kind of a brief example of the power of the compounding interest. Now, let's say that you actually wanted to do a little bit more. Let's say that you wanted to do $500 a month. So if you wanted to do $500 a month in contributions, again, starting with the $500 there, you can see with all of this, after 20 years, you can see that with the same metrics here, same amount of years invested, you can see that is the difference of money that you make. That is your after 20 years portfolio balance, almost $255,000. So that is just freaking nuts. So that's going from $100 per month to $500 per month. And then that is your ending balance after just 20 years, guys. Now, of course, this is just an example. It's obviously not going to be the same rate of return. Some years will be more good, some years not so much. By then, your annual dividend income is $12,000. That means that out of your entire portfolio, you're making almost $13,000 per year in annual dividend income. So now back to the actual portfolio, let's really quickly dive into the different holdings within my portfolio. So you can see down here in M1 Finance, these are the different sectors or slices of my portfolio. You can see I have different allocations, and I'm going to sort this really quickly by the highest to lowest allocation. You can see I have the core pie right here. It holds 3 different ETFs. I have BST, which is a science and technology ETF. I have SCHD, which is a US company dividend equity ETF, and I have SCHD, which is the large cap growth equity ETF. All of these are really, really great in my opinion. You can see I have them split pretty evenly. They've done pretty well. I think the worst performing of these overall has been the SCHG, the large cap, just due to the kind of tech burst that we've had. It kind of brought down that value quite a bit, but we've, as you can see, bounced back over the past week, and we're on track to do a lot better upcoming in the next few weeks. Now, the next highest I have in my portfolio is the technology pie. You can see within that I have 2 holdings, which is actually Apple and Microsoft. Overall, pretty good companies. I really believe in both of these, and I think that there's a lot of potential in both of these. Now, Microsoft actually is trying to buy Activision right now in an all-cash deal. They're trying to do it for, I believe, $95 a share. It is a $68.7 billion buyout that they're trying to do here. Microsoft is totally trying to take over the gaming industry, and if this deal goes through, Microsoft will actually be within the top 3 gaming companies in the world and the number 1 spot in the United States. So that is actually a huge deal. Activision, as you know, makes games such as Call of Duty. They also do any of the Blizzard games, so like you have Overwatch and a lot of different games there. Now, this deal may not go through. It may not actually be able to go through, but if it does, it will be huge for Microsoft. And that's one of the biggest reasons I'm super bullish on Microsoft. And generally speaking, I really do believe in Microsoft. I believe that they are a strong company, and I frankly just think that there is so much growth potential. I think Microsoft is possibly in danger of actually becoming some form of a monopoly. And, you know, that is a real concern. But all in all, I really do believe in what they're doing, both of these companies, and I think that it's a lot of great potential. Next on the list, at 21% allocation, is my consumer category, and within this pie, my number 1 company that I'm the most bullish on is Costco. So I'll make a video later on the future of this company and why I'm so bullish on it. But to sum it up in the nutshell, I really do believe in the business model. I believe that they have a second to none business model. They don't have to worry about warehouse because their store is literally their warehouse. And their number 1 revenue source actually comes from memberships. And I think that Costco has done an excellent job developing their business model and really standing out within their industry. Next on the list is Disney. Disney has kind of been a uphill battle for me. I think that Disney took a pretty big hit through COVID and everything, just in terms of their parks going down. And of course, in the midst of COVID is when I started investing. So that's why my entire portfolio is not doing as good as it could be. But I do believe in Disney, and I believe that they are a good company. And I think that once COVID is fully resolved, they're going to come out of this better than they've ever been. Next on the list is Home Depot. I really just love Home Depot. They've paid very consistent dividends. I don't have a whole lot of value with them, but I really do believe in the company. I think it's a great company. Next is Coca-Cola. Again, same thing. One of Warren Buffett's major stocks is actually Coca-Cola. I really believe in Coca-Cola. It's been around for so many years, has consistently gone up each year, and just generally a great company all around. Super strong, really great fundamentals. I believe there's a great future for Coca-Cola. Next is Procter & Gamble. I really do love Procter & Gamble. They make so many different products, and you can see they're actually the one holding this week that has been in the red. I am bullish on this company. I think that they have a great future, and they pay a consistent dividend. Next on the list is my real estate pie. It's allocated currently at 18%. And within this portfolio, my number 1 holding is actually Vici Properties. They've done very, very good for me. I have quite a few shares of, and they've done really, really great for me. The next is Store Capital. I do like the company, but they've had some issues in terms of their management. Next is Realty Income Corp. This is a staple in terms of real estate REITs for most dividend investors. They are a monthly dividend payer, super, super consistent growth, really just an all-around great company. Next is MGM Growth Properties. Again, really, really great company, has done pretty good over the course of the past month or so. And last but not least is Simon Property Group. Now, Simon Property Group has kind of, again, been an uphill battle for me. I've really been trying to buy the dip and play the whole game, but they've not been performing as good as I would have wanted them to. I'm not necessarily bearish or bullish about the company. I'm kind of currently neutral on it. So I'm going to be monitoring it over the next few weeks, and if it doesn't start turning around, then I may be actually selling out of it. Now, the next category is actually the fintech/banking category, rated at 5% of my total portfolio. And within here, I have 3 holdings: JP Morgan, T. Rowe Price Group. Last but not least is Wells Fargo. Next on the list is my energy pie, which is up currently 3%. You can see I have 2 holdings here. I have Chevron Corp and ExxonMobil Corp. Both of these have done really, really great. The oil and energy industry has really done excellent over the past month, and I believe right now my ExxonMobil is actually up about 20% overall, which is super, super exciting. Not really looking to sell off yet, not really looking to do any of that, just really holding on to it and kind of just riding the wave at the moment. Next category is 2% of my portfolio, currently up almost 4%, which is my restaurant category. In this category, I currently have 2 holdings. I have Texas Roadhouse and I have McDonald's. Now, Texas Roadhouse has been expanding pretty rapidly, and I believe they're a pretty undervalued company at the moment. I think they have a lot of growth potential, and they pay a pretty good dividend as well. Next on the list is McDonald's. McDonald's obviously is the real estate tycoon of the fast food industry. Their entire business model, similar to Starbucks actually, revolves around basically having one of these on every single street corner of every single city block. And McDonald's is making it happen. They've got consistent growth. They are just generally a really great company, and everybody knows the name. And it's something that I really believe in, and I will be paying a lot more into in the future. Next is Starbucks. I haven't actually invested yet into Starbucks, but it's something that I'm looking into buying pretty soon once I see a good buying opportunity. Again, similar to McDonald's, I really do believe in the fundamentals of the company, and I believe in the business model, and it's something that I'm looking into. I'm just kind of waiting for a buying opportunity at the moment. Last on the list is actually industrials, which is doing pretty bad over the course of the past week. We're down almost 6%, and you can see I've got 2 holdings. I've got 3M and I have Caterpillar Inc. Both of these companies I'm not necessarily bullish on. I recently added these about a month ago, and I've watched the value progressively go down and down and down. I do think that there is some light at the end of the tunnel, and I'm willing to risk riding that out. Don't have a whole lot of value within both of these companies. Again, not super bullish on them, but I am excited to see the potential growth that comes out of it, and I pretty much believe that they're going to bounce back at some point. But that is my entire portfolio. You can see as of this past week, we're actually up 2%, which is pretty good, up $75. All right, now let's take a look really quickly at the dividends that we've made for this past month. You can see I actually made a 9-cent dividend in Walmart Inc., which I actually recently sold out of because, frankly, it was not doing very good, and Walmart has had just a lot of issues recently at the time when I sold it, and I just wasn't really happy with it, so I went ahead and sold out of it, but I did still collect my 9-cent dividend. The next was, again, a 9-cent dividend that I got from SCHG. Next after that was $2.85 from Vici Properties. Next after that was 68 cents from MGP. And then 33 cents by Realty Income Corp, followed by $1.18 from Store Capital. Now let's take a quick look at the trades that I've made in this portfolio. You can see I've been basically dollar cost averaging into the portfolio, so I've basically just been buying any of my underweighted holdings within the portfolio. I've been doing about $125 per week, as you can see, but there were a couple things that I would like to show really quickly. So on January 4th, I actually sold out of the healthcare company AbbVie, and the biggest reason for that was it was actually at an all-time high. I believe I sold it at about 20% of what it was worth. It was at an all-time high, and I wasn't bearish on it by any means, but I did think that I wanted to take advantage of it while I still had the chance. I wasn't sure how much longer I could safely ride the wave, so I did go ahead and sell out of it. The next biggest thing that I did in this month was actually January 5th, and I bought into BST, which is the BlackRock Science and Technology ETF. They are a monthly dividend ETF. I saw that they were at a pretty good valuation, and I wanted to go ahead and take advantage of that. I have since then tried to dollar cost average into it over the past few weeks, and now I've got a pretty good standing in the company. But anyway, that's about going to wrap it up for the portfolio update. This is something that I'm hoping to do each month as a bare minimum. I may make a different video kind of like this every once in a while when I make a pretty significant portfolio change. And if you guys are interested in seeing this portfolio, I'll actually be leaving a link down in the description below so you can check it out for yourself. And as always, know that anything I talk about in these videos is not to be considered financial advice at all. I'm just a dude who is trying to chase his investing dreams and see what happens in the process. But anyway, I hope that you guys did enjoy this video. This is a different style video from the videos that I've made in the past. So if this is something that you'd like to see more of in the future, go ahead and drop me a comment in the comment section below. I would appreciate it, and I do read all my comments and generally try to reply to as many as I possibly can. But anyway, guys, that's it for this video. Thank you so much for watching. This has been Tyler Self. I will see y'all in the next one. Peace out.